And today I have the pleasure of hosting Mr. Zack Brittain from Waterloo.
So let's get into the Waterloo region, baby. Volume of listings and sales is down 30 to 40%. So let's talk about what that means.
Crazy.
There's 30 to 40% less deals, period, right? Right? So there's less deals for you to choose from as a buyer, but that also means as a seller, there's less listings for you to compete against. So, and this is why it could make sense to sell 7 years. 7 years of inventory at 2 months or below in Waterloo region. And this brings us to kind of a last point on this. In my local market, I am seeing general Canadian and international economic trends and signals are not matching up with our local real estate market. And what I mean by that is our local real estate market is super low inventory and has high demand. So it's very, very competitive. And in an environment, in a market like that, it is positioned that assets will continue to appreciate in value because there's just not enough of them for the people that want to buy them. Well, that doesn't really match up with the overall feeling and sentiment of the Canadian and the international economy.
And if you look into the trends for immigration targets alone, this should be a great indicator that for anybody who is actually investing should be looking to these trends. What is actually happening, beyond the news. Hello everyone, Sandro Canada here, your host for the Canadian Real Estate channel, directly from the Empire City or Ottawa region. I live in the Ottawa Valley. To be more specific, been investing in multifamilies. I've been doing luxury rooming and land development. And today I have the pleasure of hosting Mr. Zack Brittain from Waterloo. How are you doing, Zack?
I'm toasty today. It's getting warm, but I'm feeling good. And for those of you watching the video, Sandro promised me before we got on that he was going to play the grand piano at the end. So stick around. He's going to play us a tune. I'm looking forward to it. I'm looking forward to it.
As a matter of fact, I'm actually a multi-instrumentist. I played 4 different instruments.
Come on, are you pulling our leg?
Yeah, so I play bass. I'm a bass player, drums. I also play keyboards, and I play guitar. Yeah, so that's the real deal, baby.
I'm jealous. Not just a real estate investor. Let's go, Sandro. That's awesome. Well, when I found out that you were going to be hosting the video, I was pretty pumped. Like I said before we got on, just took a look at your social media page and just like really practical stuff. And that's kind of something that I think a lot of the people, not just hosts, but a lot of the other people in the other cities that we do these videos for on the Canadian Real Estate channel, these are people that are out there actually like doing these deals and doing these types of investments and building this type of business, themselves, not just talking about it. And that's just something I appreciate and respect as somebody who just says, hey, this is what we're doing and why, giving you kind of the real information. So I thought it was a good follow. So if you guys aren't already following Sandro, like super practical stuff over on his Instagram page, I really like it.
Sandro Canada. In any social media, you go there, Sandro Canada, you'll find me.
That's good branding, baby. That's good branding.
Waterloo.
Yeah. So let's get into the Waterloo region, baby. So today, we're going to talk about a little bit of networking and events. Something that, I really missed out on, Sandro, in the last couple of years during kind of the COVID years, let's call them, was kind of just getting together with other, potential clients or potential partners and networking with other people in real estate. There's a big misconception, I think, with people that aren't in the real estate industry or aren't really involved with it, that, it's kind of like this big, scary, not friendly place. And honestly, I've had the complete opposite experience. A lot of real estate investors, a lot of people that, are truly involved in the real estate business, they're pretty easy to get along with and really easy to talk to and happy to talk about their business and share if there's things they can do to help. So we're going to get into that. We're going to talk about our free portfolio analysis service that we're offering, and then how to sell investment properties as well as market data. I'm a big numbers guy. Numbers don't lie. I don't like dumping numbers on the videos here. I like to just take, some of the big key numbers and break them down a little bit, what their implications are, and really how they are going to impact potential buyers, sellers, and investors here in my market. So if you guys just want the numbers, no problem. You can either email me direct or just skip to the end of the video and drop comments on specific pieces of information or data that you guys want to see. But if you want to stick around for the rest of it, we're going to cover portfolio analysis for investors, as well as selling investment properties, and a few value add things that you guys can do that other sellers just aren't doing that I'm noticing in our market. And Sandro, almost guarantee you're going to be able to chime in about, things that sellers do right and wrong, because you have acquired and sold, investment properties before in your career. And as somebody who has done that with success, yourself and myself, it's quite easy to tell the difference between, people who are doing that the right way and people who aren't.
Absolutely, especially in this market where all the wannabes, they're running away. And that's when we are actually put on fire. And if you know, if you don't, you connect and partner with the ones who do know what they're doing.
Yeah, it's kind of that funny thing. You don't know what you don't know until you do. And you're just like, well, how do I get to know those things? You call people like Sandro or myself, people who are experts in your market or have experience with the types of deals and business you want to do. That's why I said the networking and events. So let's just get into it. MultiFamily Conference in Toronto, May 26th and 28th. Myself, my partner, Matt, and our coordinator, Derek. If you guys want to meet the Derek experience, he's our coordinator. He's the only other guy on our team that helps run the Phipps Brittain Real Estate engine. We're going to be there Friday, Saturday, and Sunday. If you guys want to meet up when we're there, if you guys want to talk business, if you guys want to make some content, or if you just want to say, hey, love to meet anybody that's going to be going to the conference. A big part of these things is building our network, getting to talk with other investors, whether they're, a little bit behind where we're at, exactly where we're at, or ahead of where we want to go. That's a big part of these conferences. I think there's a ton to be learned there. I think there's a ton of connections to be made. So if you guys are going to the conference or you want to figure out, what we're going to learn from the conference, we plan on making a ton of content around this and kind of sharing our experience so that if you guys don't get a chance to go, at least you kind of get a firsthand look. And then I just want to put it out there. We have started considering looking for partners in order to grow our business. And what I mean by that is other investors that want to invest in the projects that we see value in here in our local market. Obviously, we can't talk specifics. It's going to depend on the partner. It's going to depend on the deal. But we did do an event last year on JVs right here in Waterloo Region at our office. So we can share typically how JVs are broken down, how partnerships are started, and how they're run with success. And I know, Sandro, somebody like yourself has experience with partnerships and JVs, a great way to build your network, grow your portfolio. And I think a lot of investors, whether it's just to get started because you want the help or you don't have the financing and the capital behind you to really take that first jump alone, or you're a more serious investor looking to really scale your portfolio, partnering or JVs or some sort of agreement between multiple investors is one of the tried, tested, and true ways to really scale a portfolio.
Absolutely. In my experience, using the power of leverage is the fastest way for knowledge and for deals. So I used to say that you have 6 pillars: other people's money, other people's time, other people's credit, other people's deals, other people's knowledge, and other people's network. So when you master the capacity in leverage, it's basically using simple lingo. I'd rather have a slice of watermelon than the whole grape for myself. And that's the fastest way. Partner with Zack, for example, who knows deeply his market and know what he's doing, so you can literally just leverage his expertise, come with some time or capital, whatever you bring to the table, so you can grow faster.
Absolutely. I always really believed in you can go further together.
Yes.
Right? You can go faster alone, but you can go further together. I can go faster by myself because I don't got to worry about what other people are doing. It's just on me. I can move as quickly as I can move, but eventually you are going to hit that wall. You do need people to help you grow once you get to a certain level, or if you don't have the capacity, whether it's time, energy, money, credit, network, access to deals. And I truly believe there is a lot of opportunity for win-wins with partners. So if you guys are interested in partnering, get in touch. If you guys want to get in touch on the MultiFamily Conference or just meet up there, good way to do that is to get connected through our website. We have a contact us page. Here you can sign up for our investor hot list. So if you guys don't want to talk to us about the investor or the JVs and partnerships, or you don't want to go to the MultiFamily Conference and network, no worries. If you want a good look at Waterloo Region and from an investor perspective, we send out the email every single week. Myself and my partner, Matt, go through it personally. And if we get the chance, we'll go view these properties in person before we post them, so we can give our honest opinion on condition, features, price, rent roll. We'll share a little blurb about the properties we think are good deals, whether they're multi-unit, single-family flips, duplex conversions, ADU opportunities, or especially during the winter months, there was a couple weeks where we just didn't have a ton of good deals. So, we're not trying to make something out of nothing. We will give you, unfortunately and fortunately, our brutally honest opinion on where we think there's good value. And it's a really good way for potential investors to compare our market to other markets or figure out if there's legit opportunity for deals. Now,
this is so important, because what I see happen in the industry, the amount of smoke and people promising things that are not really true. And then we see, people coming with money and wannabes, investors, and getting burned because they're not seeking the right advice.
I appreciate that. And just to clarify, this is really good for people that want to get clarity on what's in our market. This is not how you are going to find necessarily your next best deal. If you want to find your next best deal, you need to be actively looking. And what I mean by that is you need to be, have your search criteria and your investment criteria nailed down to a T, so that when a new listing does come up, I can call you and say, hey, here's the listing that fits your criteria. I'm going to go view it, tomorrow at 2 p.m. because that's the quickest that they're going to let the showings in, because it's 24 hours. And do you want to come? If not, I'm calling the next guy down the list. So if you want to be on the list for the call, then we need to hop on a phone call, establish your criteria, run your numbers. If you just want a quick, totally free, no obligation, go to the investor hot list and check it out. It's totally free. And we'd like to share some content there as well. So number crunching for ADUs, sometimes we'll share Excel numbers for specific deals, kind of how we're analyzing our market. Really just a wealth of knowledge for people that are looking to get an idea of what Waterloo has to offer.
I love it.
Now, Sandro, more free. I like free.
I like free indeed.
Well, because I find in this business, if you try and either charge people for everything or you hold everything close to your chest, really hard to make friends. And I like doing business with friends a lot more than with enemies. So for our portfolio analysis, this is completely free service we offer for investors. We'll go through, and I'll go through this in more detail in the next few slides, guys, but current holdings, your current financial situation, what your goals are for both immediate, like, hey, here's the big problems or issues or concerns. Okay. And then let's also talk long-term, because how you navigate your short-term goals should be guided by your long-term plan and your long-term kind of end goal. And then an action plan. And I think this is where a lot of people in business, not just real estate, really miss, is like, okay, I can't give you proper advice as an investor or as a real estate agent until I understand in depth the situation and your goals. Because if I'm advising before I know those things, I'm not giving good advice. I'm not giving true advice. But I want to have people understand very clearly how to get shit done to move from where you're at now to that end goal, whether it's with just one of your properties or whether it's, taking a look at your entire portfolio. The more information that you have, the more likely it is you'll make an educated decision either way, right? So let's just unpack this just real quick, Sandro, is when you're analyzing your current holdings, the obvious that we want to go through right away is your equity and your debt positions on any of your holdings, your tenant situations, and then your current condition and features of your assets. So, if you are preparing for, let's say, refinance market has changed up a lot on investors in the last 12 months, Sandro. So people's initial plans for refinances last year or this year, your values weren't there, or the interest rates weren't there, or the financing products just weren't there to support what you probably had planned. So it's really common for investors to either extend or try and put their properties into different products. And even more common is if investors have made significant gains on their properties, a lot of them have chosen to offload. They're thinking, okay, well, if the market's going to be rocky here for another few years, why take my chances if I've already made all this money? Let me cash in, lock in some gains, and then start hunting for some deals, with the cash we have in hand. So those are the key things you want to look at with your current holdings. Then we go over to your current financial situation. And a lot of this kind of goes hand in hand, right? Your financing, your purchasing power, your cash in hand, the credit and other lending you have access to will be directly related to, your equity and debt positions on your current assets, or your business or your personal income that you've been using to fund your acquisitions. And so combining current properties, what their situations are. Is there a way to communicate better with tenants? Is there a way to improve their units, to improve your rent roll or resale or refi potential? Is there economical ways we can improve the value of the property prior to this refinance or a potential sale? Or is it, hey, maybe you didn't really have a lot of advice or a lot of help managing your first few properties, and you've let them kind of get out of hand to the point where you're not necessarily as control. Okay, well, we can step in and say, you need to do X, Y, Z with your current tenants and with your current properties to get yourself back on track. Don't lose faith in the real estate investment. You just need a little push in the right direction. Right?
And this is an analysis done based on numbers and facts, not in emotions.
Absolutely. And so what we'll do is if there is potential work that needs to be done, or if there's potential changes, say new tenants, new rents, updating of units, installing, new features, or improving the condition of your property, we can walk into your property and within 24 hours come back to you and say, okay, this is how much we suggest you invest in the property. Here's how much it's going to increase or change your monthly income. Here's how much we expect it to change the after repair value. Now let's look at your portfolio if you do those things. And then you can start selecting, okay, I want to do, 1, 2, 3, but 4, 5, 6 don't make sense, because if I do these, this will give me the refi, or this will give me the resale I need. Right? And since we have experience with multi-units, those are things that we have, a lot of experience in doing. We can tell you right to your face, hey, you're renting this out for $1,400 now, but you update the kitchen and put some laundry in here and maybe extra storage down in the empty basement in your multi-unit. Okay, you can get $2K a month for this. That's an extra $600. You're increasing your value, almost 30, 40% just for that unit. What does that do for your ARV? What does that do for your monthly cash flow? And these are things that we have experience doing, because we do it for our portfolios every year, right? And we do it for our clients as well.
I love it.
And then finally, we'll go through these ones quick. It's just goals, guys. You need to know what your goals are as an investor. I think a lot of people go into investing with clear goals, but as they grow and as their personal situations change, so do the goals. So given your current position, is your goal, I need monthly cash flow? Or do we need to just keep building equity? You don't need the money right now. Or do you just need to start focusing on scaling, because, the monthly money or the amount of equity is no longer the number one goal. It's how do we continue to grow the portfolio? And finally, once you kind of have those first 3 taken care of, you can really just go after an action plan. And that's really where we can take over and provide real advice. Hey, based on your portfolio, it makes sense to dump this one because you've probably extracted the most value out of it already. And if you do that, you can reinvest it in, properties like XYZ, or you can reinvest in your current portfolio, and those will then produce way more cash flow than that other property ever could. But we want to give clear steps for progression, and we want to be able to give real advice. And since we are experienced in these deals, we are experienced in managing these types of properties, holding them personally and managing them as well. We can give you guys, a clear plan of attack to really improve or execute on your portfolio.
Selling investment properties.
Now,
okay.
I want to start off by saying part of the portfolio analysis is to consider all of your options. And when we have people call us and say, hey, Zach, I want you to sell my fourplex. It's great. I love selling multi-units. That's how I get paid. Awesome. But we also like to ask, why are you selling it? Like, are you selling it because you think that's your only option, or because you had a tenant ruin your experience as an investor and you just no longer want to be a landlord? That's not a viable option for you. That's fine. Whatever your reason is, it's important to know, because I think sometimes investors get themselves into positions where they're just tired of it, right? Especially a lot of small to medium-sized investors that if you have a career and you've been managing properties, all it takes is 1 or 2 bad tenants for a couple of years, and it's exhausting. It's stressful, and it's exhausting, and it's expensive. And so, go ahead.
Yeah, one thing that I find very interesting, that as I interact with more landlords, a lot of times these individuals, they're not treating their real estate as a business, but like as a cash cow, and that's when they get burnt out, because now they don't have the cash flow that they expected. They are putting extra hours after their normal hours. And again, if somebody like that, then talk to us, because then you can take the burden out of them.
Absolutely. And I think most people go in with great intentions, and they go in with a good plan. Execution's a totally different ballgame. So, when we are selling an investment property, and, we do that consistently. And I just like to highlight, and I know, Sandro, you've probably noticed this too, about 80% of real estate agents that sell, multi-units kind of below 10 units, let's say, they don't really do that a lot. and they probably don't even own those types of properties themselves. I would say about 20% of agents in my market that are selling multi-units at any given time actually own and invest in real estate. And the other 80% is just a client, family friend maybe, or a client that they helped buy and sell a few properties that bought a multi-unit a few years ago. And they just have no idea how to properly list and sell that type of property. And the number one thing, go ahead.
Yeah, what blows my mind that at some point in my career, I worked in the insurance industry, and they made me, quote unquote, buy some insurance, because how you sell insurance if you don't own? Or the same to real estate. So many agents that they don't own a property. So how, like, it blows my mind.
Look at me. Look at me right now, Sandro. How can you advise a client on how to buy, sell, and invest in real estate if you do not do that yourself? You know, our progression to the level of success that we've reached now was step by step. It was a little bit slower than maybe some other people, at least mine personally, but I took the prove it strategy, then sell it. And so, you know, started off with the duplex conversions, doing them work myself. So I knew how to tell clients, you know, this is the shitty part of these jobs. These are the good parts. Here's what's expensive. Here's what you can do on your own. I physically know how to do those things. I manage my own investment properties right now. So I know how to talk to tenants. I know how to sign leases. I know how to attract the right types of people. Right. And so the prove it strategy has, you know, really helped us become much more successful in investing in real estate and helping clients with success. Because when you're helping clients, the last thing you want to do is have something go south because you didn't properly advise them. Not only is that going to cost them a ton of time and money, but just like that just hurts my heart and my soul. As somebody who wants to see your people succeed, you got to take responsibility for that. And we have so much confidence in our advice in investing in Waterloo Region because we are actively doing it. So number one, guys, if you're selling investment property, identify how potential buyers are actually going to value your property. So think about it. When you bought it, you had an idea of why it made sense for you, right? Now, you have to sell it, and you want the highest possible price. Well, the buyer wants the lowest possible price. So how do we find a logical middle ground of, okay, well, these price terms and conditions make sense for this type of property because you have properly identified and communicated the value that that asset you're selling offers. So current income and future income potential, value add potential, condition and features that it offers that other properties do not, okay? And since I view, between myself, I would like to say 95% in person. We view 95% of potential investment properties from duplex conversions, ADUs, all the way up to any big multi-units that are on the market. We probably view about 95% of them before they actually sell. And so we can come in and say, okay, well, based on the other 10 that we viewed, just like yours in the last month, yours is better here, worse here, the same here. How do we position that so that, you know, a buyer is going to come to your listing instead of the other 10 that are going to be on the market? And that's part of the process. Next up, we need to be able to prepare the property for market. And a lot of that is tenant communication, data collection, media, so that you can actually market the property well. If you have tenants that are difficult, that's fine, no problem. We have lots of experience with those types of people. Communicate with them. They're scared, they're annoyed. You know, people are going to be coming into their home when they're not there. Maybe they have pets. You know, maybe they're just really private people. Maybe they hate you as a landlord. Like, there's so many things. You're in people's worlds and you're in their lives. We have tenants of our own. We communicate to them. We are happy to take that off of our clients' plates and just say, hey, look, you hired us for a job. Let us do our job. We will go communicate with the tenants, explain to them what's going to happen, how it's going to work best for them or for us, understand their situation so that they know we actually give a shit. Because at the end of the day, I need my tenants in the properties I'm selling to understand that we are in this together and we want to work together. We're not enemies, so that if something does happen or if they do have a concern, they can come talk to us. Because, you know, usually it's just like, well, I got a cat and I'm scared it's going to get out and I'm going to be at work until 4:35. So if somebody's coming through during the day, so no problem. Why don't we make arrangements to have just them stay in the bedroom and we can keep the bedroom door closed? Or maybe we can have them crated, or maybe we can have our coordinator or somebody else in the building, you know, let them stay at their place that day. There's so many like just stupid little things that don't really cross your mind as maybe an owner or a landlord. But what I'm getting at with this is we need to position the property to be able to market it and sell it. But if I can't get people to view the property in person, then it's going to be really hard for me to sell it for top dollar. And communicating with your tenants and having everything ready in advance will dramatically increase your chances of getting people in the door. The more people I get in the door for my listings, more offers I get. Simple as that.
Wow. Yeah.
After that, Sandro, too, positioning and marketing, right? I mean, savvy investors, the marketing isn't necessarily the thing that's going to maybe cause you to go offer on the property, but positioning and marketing will make you look at it. And our job is to get the most eyes on it for the qualified buyers that are going to pay the most for your property. And that ties into the last slide there, is understanding how a buyer will identify value in your potential listing. And if I figure out what a buyer would value from your property, I can figure out the type of buyer that would buy that property. And now I got you. Okay, now I can figure out where those people find listings, the types of agents they work with, the markets they're in, where they find their properties that they actually end up viewing and purchasing. And then we just plug that into our marketing system. Email, social media, video, and then obviously multiple listings, whether it's on Treb and our local marketing, or our local listing, email marketing, and then phone marketing. We'll directly call other agents that we know that buy and sell these types of properties because we've done business with them and we have a database of them. And then we also have a database of potential buyers that we can shop the listings to. So it allows us to really kind of take an omnipresence approach in a very specific way for a specific type of buyer. So finally, when selling a property, and this is why we ask why people are selling properties, is, are we reinvesting the gains? Are we doing this to make a new acquisition? Have you already made an acquisition and you need to offload this property to close on it? Is this, an opportunity for you to partner on other deals with other people? Are you retiring or getting into lending, right? There's so many possibilities once you start to accumulate assets and some wealth. And if there's an opportunity for us to help our clients accelerate their financial growth, then yeah, let's do it. But that being said, I really just make our clients question, okay, why are we selling an asset? Because just like me, Sandro, the wealth is in the long-term holds. You really do generate a ton of wealth by holding assets long-term. And so we want to make sure that if you go down the path of selling, one, you hire a team like us that sells these types of properties well. Two, you sell them for the right reasons, because we want to make sure that our goals are aligned with that, and that'll help us execute on the sale as best we can.
Absolutely. And also making money, right? Which breaks my heart when I cross individuals that they buy a property that is bleeding, will keep going down to the hole. Say, oh, but investors, say, oh, how are you making money for losing here? Oh, but the long term. So it's like a gambling, almost, right?
Yeah.
Now, having the proper advice, you can save a lot of headaches and then set these individuals in the right direction. This is what I love about this.
Absolutely. And I think this is a big reason why a lot of people on the Canadian Real Estate channel have reached out to us, because we are actually investors as well. And, I can say statements like, well, if I was in your position, given the capital, the buying power, and where you're at in your wealth building journey, I would do X, Y, Z because of this reason. And chances are I'm either probably in a similar position to you are as an investor, or I was in a similar position to you are, and I've pulled off the actual steps to move myself up that ladder. So I like using that. Hey, if I was in your position, knowing what I know now, I would do this, and here's why. And then that really starts, getting investors thinking, well, not only do Zack and Matt kind of know what they're talking about, but also, well, shit, it sounds like they've actually kind of been in a similar scenario. So let's see if their strategy that they used actually works. So I think that's huge. And I'll just cap this off, guys. Like, when we sell properties, we'll do like 100% guarantee, or we'll sell it for free. So if we go through the process, if you sell a property, I hope you're using an agent that is experienced in those types of deals. They will be able to put you in a position to net the most once you sell the property, keep the most cash in your pocket. But 100% client satisfaction guarantee. If we are listing a property and you are not satisfied with the sale, no commission. We'll do it for free, because I'm willing to put my money where my mouth is. A big part of our business is relationships. And our goal is to execute 100% of the time. I can't say we've had any complaints. We are very open and honest with our clients. And I think, as long as we're open and honest throughout the entire process, I'm very confident in me and my team's skills to be able to pull off a great sale. And better yet, our market is starving for listings. We have very few good listings in our market in terms of multi-units. And legit, there's buyers and investors out there ready to rock and roll, but there's not any good deals out there for them, or very few at least. So if you're considering selling a property in the Waterloo Region, the surrounding area, 100% satisfaction guarantee. We know how to sell them, or we'll do it for free.
And I'm gonna tell you, and being an investor, and I talk to a lot of agents, I don't see anybody doing this. This is what confidence in knowing what you're doing means. That are willing
Absolutely.
to do for free if your client is not 100% satisfied. Kudos to you, Zach. I love it.
I am putting my money where my mouth is. I am more than happy to. That's how much we believe in our experience in our business. So, and this is why it could make sense to sell. I'm not saying it's funny. I have never regretted a purchase, but I have almost regretted a sale, because then you're like, oh man. But I sell properties to acquire more, or to acquire bigger, or to reinvest into my current assets. Now, that's just the position I'm in as an investor, but 7 years of inventory at 2 months or below in Waterloo Region. And we'll talk about me and Sandro. I'm excited to hear Sandro's take on this too, as another investor with experience, not outside of just one market like Waterloo Region. But we cannot get units to market, and we can't get them to stay. Waterloo Region, geographically, economically, socially, was positioned to grow, and right before COVID and during COVID really accelerated that growth, like a lot of smaller markets than the GTA were. London, Windsor, Hamilton, Brantford, you go the other way up towards Barrie and Aurelia, right? These markets were positioned to grow quite well, and then all of a sudden COVID really pushed a lot of people to those smaller markets because they were, at that time, more affordable. Well, we cannot keep inventory because demand has kept up. And I just wanted to show that. And we'll talk about some of the quick data right now. Volume of listings and sales is down 30 to 40%. So Sandro, townhouses, detached, condos, semis, all the volume of new listings coming to market and volume of sales actually happening is down 40%. So let's talk about what that means.
Crazy.
There's 30 to 40% less deals, period, right? Right? So there's less deals for you to choose from as a buyer, but that also means as a seller, there's less listings for you to compete against. Yes. Okay. Now let's take it a step further. If there's less deals to be had, doesn't that mean real estate agents would be competing for a smaller amount of deals? What's going to happen is people in our business that either aren't very good or don't know what they're doing or haven't, prepared properly, so they're going to start doing less and less business every year from here on out, and they're going to get pushed out of the business. People like myself and Matt, we're very consistent. We do about 50 to 60 transactions a year, which is enough for us to, make very good money and invest in our real estate portfolios. But it also means that we aren't doing such a crazy volume that we have to hand our clients off to other people. So when people reach out to us to work with us, like, you get to work with me, you get to work with my partner, Matt. And we're the ones that are actually going out investing. We're the ones that are actually meeting with the sellers, meeting with our buyers, negotiating our contracts. And, we do 50 to 60 deals a year like clockwork. It's enough that we're active in the market, but not so much that we can't actually work with our clients that want to come and buy and sell properties here in our market. And there's going to be a shift in the real estate business in the next few years where, the bottom 20 or 30% of agents are going to get pushed out of the business. There's just not as many deals for them to go around. And the next kind of key part I want to talk about, kind of the third point down, is the condo market. Our condo market's a little bit different than the rest of the market because traditionally there hasn't been a lot of condos in Waterloo Region. And up until about 10 years ago, there really wasn't that many condos. Now downtown Waterloo, or downtown Kitchener and uptown Waterloo, have been redeveloped like crazy. Kitchener being closer to the 401, downtown Kitchener having, your tech hub, your Ion rail stations, your Google, your Tannery district. A lot of your big tech players are there. And then all the schools, school developments, and a lot of banking and finance kind of out in the uptown Waterloo area, and a lot of the software out in Waterloo tech hubs as well. So what we're seeing is the appetite for condos is diminishing a little bit. There's only so many one-bedroom condos that can be sold in any given market, and our market isn't saturated yet because the price points of condos haven't come down really. But we've heard whispers from people more experienced in the development world that the condos game is really slowing a little bit in Ontario, all over. So expect condo market to be a little different than, say, your multi-unit market or your detached home market. But overall, pretty much every market segment is down anywhere from 15 to 25% from this time last year.
And
right?
not just that, but we also noticed that the frenzy, the COVID frenzy, is over. That's gone. To
Yeah.
go the all-time low interest rates are also gone for, I'm not going to say forever, but for a long time.
What do you mean? We're not going to see 1%? Come on. Yeah, guys, I think Sandro nailed it on the head. That is not gone forever, but like, especially as people like my age, right? People that are, let's say late 20s to late 30s, they really started buying their first property or building their investment portfolio during super low interest rate environments over the last 10 years, right?
Yeah.
Guys, that is not coming back right away by any means. And so prices got depressed like crazy last year, but they've been ticking up every month since December. And I don't know about you, Sandra, but when I started investing, 5 years ago, it wasn't uncommon to see 2% increase in a month.
Oh my goodness.
But let me ask you this. When you're running your models on, potential acquisition, something just to buy and hold or just a straight up multi-unit purchase, what type of market appreciation numbers are you running on your properties?
3%. Like I'm very conservative. 3%.
We do 2 to 3% depending on the building, right?
Oh
or depending on the market. And it's
I
like,
tell you why. Because I look to the historical data and then I take out the equation, the COVID years. So anything from 2019, you'll go back 40 years, right? In major markets like Ottawa or the KWC, as you mentioned. And the average is 3 to 4. So then I cut one extra. Let's count 3. Because worst case scenario, if the numbers, they make sense are 3, this is great. Everything on top of that is gravy.
That's gravy. Absolutely. And so I just wanted to, and I didn't even know you were going to answer like that, but I knew because I was like, Sandra's actually an investor. He knows. Like we run our models for a 2 to 3% appreciation in our market. We've seen 2.5% in February alone. Like markets just move up and down so quick these days, but long term, guys, be conservative with your projections on appreciation. Do not bank on appreciation to be your only bread and butter when you're purchasing a real estate asset. And this brings us to kind of a last point on this. And I think this would be really interesting to kind of hear people's opinions in the comments. Is in my local market, I am seeing general like Canadian and international economic trends and signals are not matching up with our local real estate market. And what I mean by that is our local real estate market is super low inventory and has high demand. So it's very, very competitive. And in an environment, in a market like that, it is positioned that assets will continue to appreciate in value because there's just not enough of them for the people that want to buy them. Well, that doesn't really match up with the overall feeling and sentiment of the Canadian and the international economy. Everything that we're hearing on the news, a lot of economic data is pointing that, we're going to be in for a little bit of a slow period. But Waterloo Region is screaming, holy shit, this market is going to grow like crazy. So it's very conflicting for me as an investor because, the big picture kind of conversation is, hey guys, interest rates aren't coming down anytime soon. They may even go up. Inflation's not under control. Unemployment, may have to start creeping up. Things could go sour here. I'm not a doomsday guy. I do believe in long-term trends. Buy good properties with a margin of safety in good areas. You guys will do great. But I do just want to make a point that a lot of this hesitation is real and it's been felt in the market. The amount of investors, buyers, and sellers that are like, yeah, like I'm interested in buying or selling or investing, but they're just not that motivated because there is that underlying uncertainty that they want to see if things are going to get worse. But I'm going to tell you right now, all of the signals in our local real estate market are pointing that prices are going to be the same, if not higher, in 12 months because there is zero inventory across the board. So I just needed to kind of get that off my chest and really just explain that anxiety and that indecision that we're feeling in the market, just as general, citizens. Things have gotten a lot more expensive the last few years. There's a lot more economic uncertainty now than there was 2 years ago or a year and a half ago. There's no clear direction for the economy, but the clear direction for Waterloo Region, especially if you guys are willing to look more than 1 or 2 years in advance, which you absolutely have to as an investor, is long-term. Waterloo Region is positioned to grow very well, like most of Southern Ontario.
And if you look into the trends for immigration targets alone, this should be a great indicator that for anybody who is actually investing should be looking to these trends. What is actually happening, beyond the news. What is actually happening to the economy?
Yeah.
What kind of professionals are we attracting to each regions? So then makes the decision process much smoother, right? Because now you're not based on emotions, but are based on actual real data
On
and real
data. And this is why I suggested the follow for Sandro, guys. Big data guy. And you know what? Actually, what we should do, Sandro, is if you guys are watching this video and you guys have sources for good data in your local markets or Canada or Ontario, let me know. Because it is actually pretty tricky to get consistently good data on real estate in Canada. Like, it's actually crazy. It's a lot of it's really old data. Like, why am I looking at 2016 census data? Get out of here. That's irrelevant now. Like, good for historical trends, but I need current stuff. So just putting that out there. If anybody has some good real estate data sources, hit us up.
That would be amazing.
But Sandro, let me ask you this: in your markets that where you live out by Ottawa, very similar as to Waterloo Region in the sense of,
yes,
I mean, a lot of government employees, yeah, but also a lot of skilled trades, and then a lot of high educated individuals in the tech space, software, financing, corporate business, right? There's a very similar market in that sense. Yeah. And what you're seeing is semi-skilled or semi-educated individuals or educated individuals immigrating from other countries, either going to school or jumping right into a career where they're not coming in making minimum wage. There's a lot of students are, I was a student too. You're taking any job you can get because you got to pay for the books. But, right, you having people come in that are, engineers, software developers, right? Like, these aren't just, people that are digging ditches, right? This is, you know what I mean? So I just see that as, okay, educated, qualified individuals that are going to have stable careers, want to move to Canada, they want to stay here. What are they going to do?
They are coming with money. It's not that they're coming with no money. They're coming with money. They're ready to buy, right? And then we are having this issue, low inventory. We have the build-to-need happening. So it's very good news for investors. The city trying to push back, but they can't because we got to keep up the demand. So the pressure, like on the politics front and then economical trends and the immigration trends, even right now with COVID, I saw happening a lot. People from Vancouver and Toronto, they're being pushed out of this market, moving to Ottawa, because now you have more space. But again, the prices are being also stressed. As the moment that Ottawa hit the status of a million people population, then we literally now is being considered actually a big city, right? And the numbers, you don't see a lot of discrepancies. So then when you look into the numbers, say, oh, you had 20% price decrease. Well, because they're considering also the Quebec side. But when you look into actually specific areas of town, there's no such thing. It's the way around.
Yeah, and I just think that people get caught up in the short-term noise. Yes. When things are bad, the world's ending. When things are great, you can't make a wrong decision. Well, you know what? In between there still lies the long-term trends. Yes. Focus on good markets, focus on good locations, focus on what you can control. Hold on to something for 10 years and then call me, right?
And leverage professionals that know they're doing. They've been doing this for quite some time that can, direct you in the right way. Like, they're going to set up your path in the right direction, right?
And that leads me to this point, Sandro. It's like we are on the same page. I love it. Number one reason is because if you're in a market that is competitive and is in demand, good deals sell fast. And I don't care who you are, but you probably can't move as quickly as I can on deals. You just can't. This is the days to market, average days to sell in my market. I did the blue line there. I'm an artistic guy. What can I say? That is just to show the obvious downward trend. And then right here, it propped back up, and then it's starting to come back down. Do you know why? Because demand is back, buyers are out, and they are competing for the good deals. So if you guys want deals in our market, you need to be able to move fast. You need to be working with somebody that can move fast. If you guys are experienced, you don't need a real estate agent, great. But if you guys need people to find and negotiate deals for you, you have to be in a position to move quickly or the good deals are gone. Gone, right? The best deals, typically the best deals are ones that you're getting quick, right? Yeah. It's either the ones you're getting quick or you catch a seller who is just at the end of their rope and they're willing to either take less price or way better terms because they are just tired of going through the process. So be able to move quick. That is one of the best ways you can actually get a good price or good terms on a deal right now. All right.
It's amazing.
we'll just wrap this up. We're going to get connected. So free portfolio analysis. I will sell your property for free if you are not satisfied. 100% satisfaction guaranteed. The portfolio analysis is completely free. I don't care if you sell a property with us this year or in 10 years. If this gives you clarity on how to manage or continue to grow your portfolio, then I have done my job. Now, if you guys don't want to do any of that, but you want to see what's up in Zach's world, Instagram. I'm active on Instagram and Facebook, and we also have our own YouTube channel. If you're not subbed to the Canadian Real Estate channel, like, there's about a dozen agents that are on here every month, every other month, that are giving you the goods on multiple local markets. Like, in 20 or 30 minutes, once a month, you can learn what the hell is going on in Toronto, Oshawa, Sarnia, London, wherever. Like, super powerful for you investors out there that aren't sure which market you want to take a swing at. If you want to check out our personal YouTube channel, we do property tours. We do a lot of stuff on investing in duplex conversions, BRRRRs, JVs. Or if you just have specific questions for me, that's my direct email right there. Goes to me. You get me responding directly to you. And finally, I got a tease for next week.
Love it.
Sandro, next week, baby. ADUs and tiny homes special. Not next week, next month on the Canadian Real Estate channel. We're talking 9+ cap rates, 16% plus cash on cash returns. Please subscribe to the Canadian YouTube channel right now so you do not miss that episode. We're going to go through numbers. We're going to go through pros. Yeah, exactly. And the reason why I'm getting kind of greedy, I'm getting a little excited about these ones, is these types of numbers you can't get if you're just straight up acquiring an existing property on the market. Cap rates in our market are typically 4%, maybe 5%. Cash on cash returns are not double digits. So if you guys are looking for other ways to add value to properties, whether you haven't acquired them yet or you already own them, this is a fantastic way that you guys can learn more about ADUs. If you have questions before that, hit me on email. I'm happy to respond. If not, stay tuned for next month's video because we're going to go through this in detail and I'm pumped to share it. And we're probably going to host an event on this later this year so we can showcase one of the finished units. But they are sweet and the numbers are even sweeter.
This is amazing, and this is the reason why you're moving the way you are, because you are action taker, and action takers are money makers, baby.
This is true. This is true. So I appreciate you guys watching the video. Sandro, this was easy. This was easy.
Man. What an honor, right? And again, follow me. Go to Sandro Canada. So go Facebook, Instagram, TikTok, LinkedIn, YouTube / Sandro Canada. Let's connect.
Fantastic. Appreciate you guys having us on. If you haven't already liked and subscribed, please check out this video. Toss us a like and comments. I like to get some good ones. Happy to respond. But until then, we'll see you next time. Thanks, Sandro.
What's up?